All right, here we go. What's up, Mortgage Coach and Trust Engine community? I am sitting down with Matt Rundle. He is an awesome mortgage coach. Have you become a grandmaster? I think you're close to 1,000 total TCAs.
I just checked. I'm not quite there. I've got about halfway to go. So I'm a black belt.
A black belt. So we got a black belt in mortgage coach, a true mortgage advisor. And I wanted to interview him because he's super excited about this new Loans All program, the Cal HFA. I keep wanting to say Cal FHA, but I know that would be easier to say, but that's not what it is.
Right.
He is super pumped about this program and thinks it's going to be a lot of loans now. He is also pretty serious about managing his database. The company that he works for uses Sales Boomerang, and he's generating some loans now through a combination of data. So Matt, if you could just, this is the first time I've interviewed you in this forum, if you wouldn't mind just sharing a little bit about your mortgage practice, the marketplace you're at, and then let's
Sure.
talk about this Dream for All program.
Okay. I'm with a company called Weston Mortgage. We joined Mountain West Financial about 13 years ago. And people say Weston Mortgage, Mountain West Financial. I said, yes, when we joined them, we kept our maiden name. So it answers the question of how we're related to Mountain West Financial. So they're based in Redlands, California. They're a regional mortgage banker. Been at it for 30 plus years. They get stuff done. They're a great company. So they've been a great partner for my career. We're based in Riverside, California. So we're in the infamous Inland Empire, Riverside. We're tied right next to San Bernardino. So I work in Riverside. I live in Redlands. So kind of cover both counties and with an emphasis probably here in Southern California. So appreciate you having me on. I'm excited to be here with you.
Yeah, no, I'm looking forward to the conversation. Mountain West does a great job. They obviously believe in a high touch platform, but they're also very high tech and very innovative to make sure that their loan officers can deliver that high touch experience in this digital age shift. Before I get into the tactics and details around this, what is your value prop? Whether you're trying to get a new realtor partner, you're talking to a consumer, how do you position yourself as uniquely valuable?
I've got a unique skill set in able to connect with the people. It is financing, but it's family, it's kids, it's husband, it's wives. They're moving, they're relocating. It's a stressful situation. I've always felt when you get a home loan, it's like taking on a part-time, full-time job. So I embrace that with the client, really engage with them. And if I got a client today said, you know what? I want to take a moment, just thank you for being a client of mine. You've been really resourceful. This client's been looking for since the end of 2021. They missed the market in 21. They couldn't find a house in 22. And now they're back at it again. So just that relationship's been valuable. Of course, those relationships lead off to other connections too. So I think the connection with people, I can kind of break the walls down and make them feel comfortable. Then really with this TCA platform that I adopted when you had your first Modern Mortgage Summit is when I really jumped in. It's made me realize that showing this in a mortgage format, whether it be a purchase or refinance, it gives a helicopter view for the client to make financing more simpler. I like to say I sent a lot of TCAs out, and I've asked the client, when you're ready, tell me what column you want, and then hit the button in the right-hand corner. So I'll get an email back, Matt, I started and I want column number 2. Well, I just go to column number 2, and that's how we do the loan. So it's made it very simple to transition from the conversation, a lot of crazy fuzzy math to make it simple onto an application. So been super helpful for me.
What have been some of the most common strategies and ways that you're delivering advice over price in this marketplace?
Okay. Let me take a moment. When I did start that, I watched that Modern Mortgage Summit. I want to shout out to some people because I watched Wally Ellerby, Kelly Zitlow, wrote them down here. Kelly Zitlow, Dan Keller, Denise Donahue, the face of the TCA, Jeremy Forcier, Josh Metal, Deborah Bird, Todd Bookspan, all these people. So when I saw that and I realized I was using the fee worksheet or version of it and I had to compete against this, it was going to be a losing battle. So I jumped in. I struggled through having to learn the platform, and then I jumped in. It's been super easy to use since then. So I think that's been a staple of my business. In fact, I've told people that if I had one product to pick, blend, Mortgage Coach, Total Expert, this, that, I would take Mortgage Coach everything, just because it bridged the gap for the clients to make financing easier. So I'm not sure I answered that question, but I want to jump into that because that was important to me.
I love that. And how long, you said it, learning, it took some learning. How much time did it take for you to learn? How many TCAs did you need to create before you really had it nailed down?
So I had Mortgage Coach. You guys presented at one of our sales conferences years ago, and I got it and I went into it and I kind of hit a block wall and just I went to my old stuff. I came across it again, same block wall. I couldn't master the fee templates. So when I saw the Modern Mortgage Summit and I watched the whole thing, I think I was there for 7.5 hours watching it from my house and realized these people are rock stars. Those that I named and numerous other people too, and realized I got to jump into it. So I just pushed my way through it, started figuring it out. I got connected to your rock star coach, Brian Maring. Brian actually spoke at one of our events years ago, and I thought, well, Brian seems like a nice guy, but I need a really fireball coach. And when I jumped into it, they put me with Brian. So I thought, okay, great. What I found out is Brian's kind of a silent killer. Super nice guy, very easy to talk to, but he's a wizard at the TCAs. And I quizzed him when I started day one. I said, Brian, how long will this take? Because I want to really get this going. He said, in my mind, I thought 40 or 50. He said, about 5 or 6. I thought 5 or 6, you gotta be kidding me. And it took about 5 or 6 to get the hang of it. Then it was fine tuning it going there. So it was a really quick learning curve and then just tweaking along the way. And again, Brian's been helpful. When I hit a roadblock, I'll come up with a couple of questions. I'll go to Brian's calendar, set a time, choose within a half day to a day, and we tackle it and solve it. And I've got that knowledge to go to the next one. So been a big help. The coaching's been super helpful for me.
Awesome. And are you using any of the integrations that you have activated to save you time in how you create a total cost analysis?
Yeah, our company, talk about high tech, the fintech stuff we have is amazing. It's second to none. And so all those APIs where things are integrated. So I've got to my database, the TCAs are going out on a daily basis to past clients. And we have it triggered where it's $100 more per month. A lot of people view those, which is a trigger for me to give them a call. Hey, I saw you looked at it. Any questions? Where are you at? Of course, rates are higher now, so there's not the opportunity for refinances, but it's allowed me to engage in the conversation with the clients, which again, kind of going back to day one, it's like, hey, Matt, how you been? Hey, been great. How you doing? How's the family? How's the wife? So that relationship kind of bonding, because when, it's real simple, whether it's here in Inland Empire, California, the nation, when our clients need financing a realtor, they're going to get financing a realtor. We need to be in front of them. This is a tool that allows me to be in front of them on a day-to-day basis.
Awesome. Well, let's get into it. I want to make sure anyone watching this gets some loan now ideas. Like it's a marketplace where we need to gain market share. We need to get loans now. I know you're pretty excited about this Dream for All program. Would you mind sharing why you're excited about it? And actually, don't share your screen yet. I want you to share like your why this is a priority, and then share the other screen, and we'll get into an example of how you're presenting it in the market.
Okay. I think all of us in the business for any period of time, the first time home buyer is a staple of our business, and over time they become the move up buyer and so on. They spit off referrals, which is great. So CalHFA, it's California Housing Finance Agency. Apologies to the other 49 states and Puerto Rico because you don't have this program, but California, they've done something right. It just rolled out Monday. Today is March 30th. Wednesday, March 30th. This rolled out Monday, March 29th or 27th. And it's basically the state of California is partnering with the consumer and helping them to buy a home. So real simple, it's an 80-20 program. The state is giving the consumer, they have to qualify, you got to fit the guidelines. The state's giving the consumer 20% of the sales price. That 20% is at zero interest. So there's no payments. It's a silent second. It's at 0%. So it sits there and collects dust. It allows the buyer to get an 80% first trust deed, which we all know 80% first trust deed. There's no mortgage insurance. The rate as of today is 6.375. I don't have an APR handy. I'll probably get in trouble, but I'm going off of their website. Of course, the rates change on a day-to-day basis. So the borrower is essentially having 100% financing. It's not like it was back in the mortgage meltdown because the 20% is from the state. Again, it's silent, zero interest. It sits there, it collects dust. The buyer is going to save. The pearl to this program is that 20%, there's no payments made. That's a lot of money that they don't have to make. They're saving on PMI, so they're making a payment on the first trust deed. Now, what's the catch? There is no catch. The equity share is when the buyer has a triggering event. Let's just say it's the sale when they sell the house. When they sell the house, the 20% from the state goes back to the state of California, which seems fair. The appreciation, not the profit, but from the sales price when the person bought it to when they sold it, the state will participate in 20% of that, and the consumer keeps 80%. So if someone bought a house, my example here will show is $900,000. If after 5 years they sold it and they sold it for 1.1 million, they have earned $200,000 above their purchase price. The consumer keeps 160. The state of California gets $40,000. But in that example, I made some notes. The buyer borrowed the whole 100%. They're of course making payments on that 20%. So that 20% per month, per year over, I did a 5-year example, that's $67,000 that they're not paying. So if they have to share 20%, which is $40,000 to the state, but they saved $67,000 in payments over that 5-year period, it's a win for the consumer. So Dave, I want to tell you this, it's going to shake up the market in California effective like right now today. There's buyers that are coming out of the woodworks, and buyers that could barely qualify for say 500,000 or 600,000, they can do a higher sales price and have a lower payment, because that 20,000, that 20% is just basically, it's dead money. It just sits there and literally collects dust until they sell it, or if they pay their first trust deed off. There's some details to it, but that's the big picture. But it's gonna rattle California, Southern California, Northern California. Those buyers that are on the fence that couldn't buy. The market right now is just kind of in a tepid zone. It's gonna shake the market up. Prices will increase, plus we're coming into the buying season. So I'm telling my buyers, buy now, get in, you better hustle. There's $350 million anointed to the program. We estimate it'll last probably 6-7 months, probably 2,500 to 2,800 borrowers. So it's temporary, it's not gonna last, but it's gonna be a jolt to the market.
All right, so let's do this. First of all, anyone listening to this, it sounds pretty awesome to me. Like, I don't really know what the downside is, but we are a community. This thing just hit. It just went live. If you are a mortgage coach and you are fired up about this, let us know in chat.
Sure.
Even share sample total cost analysis of how you're presenting it in the market. And if there's things you don't like about it, like, oh yeah, but I want to know what that is too. I want to understand both sides of this. Although I'm with Matt, I mean, it sounds like an incredible opportunity. To me, at first,
I have a frozen Dave on the screen.
Total cost analysis. If you're watching the video of this conversation, we will put a link down below. Like if you're watching this in show notes, there'll be a link to Matt's TCA. So Matt, could you share your screen and walk us through your total cost analysis?
Yes.
And I am seeing a different screen, just
okay.
FYI.
Do you see it now?
Boom, I see it.
Okay, all right, let's jump into it. So what I did with the current market, I took a sales price of $900,000, okay? In column 1, I'm showing, it's over here, I'm showing 5% down, 30-year fixed. Column 2 is 10% down, 30-year fixed. And then columns 3 and 4 are using the Dream for All program. So let's just jump in the big picture. $900,000 sales price, whoops. 5% down, 6 5/8, 6.625%, PITI plus mortgage insurance. The payment's going to be $67.61. They need $72,000 and some change to get in. If the same house, they put 10% down, payment drops down to $63.79. They need $116 to get in. On the Dream for All, I ran it 2 different ways. This one is, so it's an 80% loan, the 20% is silent. Their principal and interest payment is going to be $55.29, but the big key is going to be $27,638 money out of pocket. That covers the closing costs. So what I didn't do, Dave, and I learned a lot during the refi boom, and Brian taught me to take that savings and put that money and invest it. What would that money do to grow with a financial planner? So if they're not spending $116 with 10% down, they're only spending 27, they've got 90,000 plus to work with to invest on the side. So that's option 1. If in this marketplace, which we're seeing, it's very active, they can get a seller to pay closing costs, they can do a 2-1 buy down on this program. So here's where it gets really exciting. If the same sales price, same Dream for All. The start rate 4.375, so 2-1 buy down. Their payment drops down to 46.32. They need the same roughly $27,000 to get in, and they bought a $900,000 home. That to me is like earth shattering. That's going to shake a lot of people, bring them out of the marketplace. So what's the cost of the buy down? We always think it's 2.25% as a rule of thumb. It's not, because it's based on an 80% loan. So real simple math for those out there, whatever the sales price is, take 1.81% of the sales price, and that covers the cost of the buy down. In this example, I got my math here, $16,284 and a few pennies to cover the cost of the buy down. In California right now today, a good realtor can negotiate the seller to pay $16,000 plus in closing costs. Now the buyer's got the seller paying a 2-1 buy down. They're at 4 3/8 year one, 46.32. So it's such a earth-shattering program. I've been doing this for a long time. I've always said, when someone's buying a home, the FICO score is the single most important aspect of financing. It truly is. And in my lifetime, my career, this is the single best program I've ever seen, because at 20% second, it's doesn't go away, but it's interest-free money. There's no payment on it, and they save a lot in their monthly payment. If you look at column 1 versus column 2, the savings in payment, 21.29 difference in payment. That's a lot of money someone could invest on a monthly basis, let alone the less money out of pocket for a down that they could invest elsewhere. So it's got a lot of benefits to it, and yet they're still a homeowner. So it's got the phone to ring. You know, we've been kind of dormant last year. It started to pick up this year. This, for all my California colleagues, it's going to shake the trees. It's going to be great.
All right, so stay right here. Don't change anything. So first of all, Scott Short just made a comment saying it's not an equity share, it's an appreciation share. So good point, Scott, and I like that word when it comes to explaining this and making it clear. So noted. This is a dramatical, by the way, what is the highest loan amount you can do on this program?
You can do the max limits for each county. Let me cover that question. That's a great question. So California is investing in the California resident, the consumer. You buy a house, use this program. They're going to partner with you on the way in. They're going to give you the 20% to cover that part of the down payment. When you have a triggering event, and let's just use selling the house to make it simple, when you sell the house and you get your proceeds, California is going to get their 20% back. It only seems fair. They're also going to share in the equity appreciation. They're going to share whatever the profit is from the sales price. They're going to share 20% of that. The consumer gets the other 80%. Okay, got that.
We've only got 7 more minutes. So just what is the maximum loan amount?
Okay, the maximum loan amount is going to be like, I'll take you're in Orange County, Dave. The maximum loan amount, $1,089,300 is the max loan amount. So
$1 million house, people can
buy.
Let
me make it better. Someone that qualifies, there's an income limit for Orange County. The income limit's $235,000. They have to be a first-time home buyer, have not owned a home in the last 3 years. So $235,000 income. In Orange County, they could buy a house for $1.361 million and do the 80-20 combo. So 0 money out of pocket, have closing costs, and they give you a homeowner. They have to qualify. There's 700 scores or higher. You can go up to 50% debt ratio. So we've got all the metrics down to it, but yeah, I mean, same for LA County, they could do the same. So you could leverage it to where you're getting that first trusted max loan amount for your county, and then the 20% above and beyond that could be what makes up the purchase price.
Okay, so let's just net this out real quick though. So $1.3 million house in Orange County. Obviously, that's going to be different prices in different counties throughout California. It's California only, but we're talking a dramatic, like no cash to get in other than closing costs. You could, buy down the rate, you could do seller buy downs. And then guys, look at this monthly payment. If you look at the savings over 60 months, let's just say 5 years, we're talking $317,000 in saving, hundreds of thousands of dollars in payment reduction. To your point, this is definitely a great opportunity to drive conversations with first-time home buyers. So great lead gen. Get out there to your database, let your database know that, especially if you're in California, never been a better opportunity to buy a home, and then netting it out with a total cost analysis it really helps show all of the value over time. And when you look at even the net worth difference over time, this is a significant opportunity for families to get into the homeownership game, build wealth through real estate. And then, if they want to do move up, they're going to be in a great position to move up in 3 to 5 years or whatever they want to do it. So stop sharing your screen real quick. And I also want to call out to all mortgage coaches, what headlines are you using? I'm sure I'm going to be seeing new creative ways of showing this in a total cost analysis. I know I'm going to see some ideas where you're going to realtors that have a house in a market and, hey, realtor, let me show you how I can put together a finance flyer that's going to help you sell this home with this new program. So this is going to be a great realtor conversation. Can't wait to see how you guys are going to roll. Before we wrap this up, I know you have your database monitored by Sales Boomerang.
Yes.
Any stories or success stories where you've generated some
Yeah.
leads?
And I got some calls from your people and they asked me, how's it working? I said, it's working out great, but the rates are high. So we started it and the rates had moved up. But on the flip side, as our database has gotten bigger and it's got, mortgage inquiry, equity watch, listing watch, cash out, rate and term refinance, PMI, all these triggers that are going to pull as the databases get bigger. Rates will go up, they'll go down. It's going to trigger. It's almost like waking up and getting a gift in your email because it's going to create a conversation, an opportunity. And I can jump and say, hey, by the way, I've heard about this program. So the fact that it's triggering a conversation is what seems to be the most valuable to me. So very helpful.
So it's helping you get into some quality conversations with folks.
Yeah, I mean, one great example is one of my clients is getting rid of the PMI. We service his loan. We got him in contact with servicing. He's going through the process. So, PMI is gone. It'll never come back. So that's created a lot of goodwill. So, again, being in front of the client when they're ready to buy, sell, or refinance, they're going to give me a call because I've been in the face of their situation. So that's been a big help.
All right, man. Well, hey, I really, really appreciate this. Anything, any closing thoughts, anything you want to share with the mortgage coach community before we wrap this up?
I would just say if you're thinking about using the platform, I definitely jump onto it. Surprisingly, not more people use it. I'm a big advocate of it. Again, if it was one tool I had to pick out of all of them, all the fintech would be Mortgage Coach. And then I think I just use it with your database on every transaction. Some people said I only use it on purchases or refinances. On every single transaction, use the platform. It's a winner. So I much appreciate what you've done for the community. Oh, I will touch bases. When I did start, the YouTube channel you created is phenomenal. I've learned a lot from that, listening to the superstars talk. It's been a big help in the business and learned a lot about TCAs, but a lot about the business as a whole. So that's been super helpful to me. Appreciate that.
Yeah, no, I love it. And a couple things for anyone in the community. I had a conversation a couple weeks ago with KP, one of the executives at another large company, PRMG, and they did an analysis and they compared all their technology. And the loan officers that used Mortgage Coach of all the different technologies in their tech stack are getting the highest ROI. It's generating the most loans, it's driving the most conversion. Also, it helps improve with rate shopping. I'm sure you've seen the benefits, Matt, that even when you get rate shopped, you can sometimes show your competitor's loan in Mortgage Coach and gives you a chance to win that loan back. But guys, what we're showing here is going to improve your profitability. It's going to improve your conversion. And most importantly, it's just a better service to the consumer. It's providing some financial literacy for that customer to make them a better homeowner and to help them build wealth with real estate more effectively.
Dave, I'll point out too on the TCA, I'm very sensitive to points. I don't want my clients to pay points at all. I want them to have the least amount. So when we saw discount points enter the marketplace a few years ago, and then during the refi craze, I've, in a good way, probably the last 2.5 years, my clients have had more discount points. They brought the rate down because I'm showing a different range of rates. It's all embedded in the TCA. They can see it there, but I think it's a good thing. They're paying it. They're getting a better rate, but it hasn't been the issue that it has in the past where it just jumps out. It's there. It's not camouflage. It's there, but they look at the big picture on page 1. What's my money out of pocket? What's my payment? Let's take column number 3. If my seller can pay a buy down, I'll take column number 4. It makes it really easy. So that's been appreciated. And it's made it easier, I think, for the consumer. They're not having to scrutinize everything, just seeing the big picture. So that's another tip of the hat to the program.
Right on, my man. Well, thank you for being a great advocate for Mortgage Coach. You've been an awesome leader to help more loan officers at Mountain West use Mortgage Coach. So thank you for that. And I know you're going to inspire a lot of loan officers to dig into this Dream for All program. And remember, everyone, I am looking forward to hearing how you're taking this to market. I just literally, while you and I are texting, Socia Vila is on here, and he just texted me saying how he's promoting it. He actually just shared a YouTube video where he's talking about this program. So can't wait to see how everyone is bringing this to market. And I'm sure you'll be paying attention to that too as well, Matt.
One more tip, Dave. I tell all the people out there, I learned this from BombBomb, but on all my videos, I didn't write anything on it, but I have a wetboard. So this is the first thing they see. So it would say, "Hi, Dave." And that's what people look at. It kind of anchors that conversation, then off to the video. So if you don't have a wetboard, they're $4 or $5. I'd get one. That's what they see from the get-go. That's been a big anchor from the get-go. And I get a lot of positive feedback when they do watch the video. So thanks again.
Yeah, I can't wait. All right, my man. Well, thank you for your time, and everybody. Hope you got value. If you haven't already subscribed to the Mortgage Coach YouTube channel, which is Netflix for loan officers. Also, the Trust Engine YouTube channel is Modern Leadership for Lenders. So make sure you subscribe to both those channels. This is a wrap. Take care, everybody.
Okay. Thanks, Dave. Take care. Bye-bye.